Hey guys, welcome back to another episode. Today we saw pretty much a red day. A lot of growth stocks were down. So in today's episode, I want to take a quick look at two stocks that I believe might be giving investors some form of buying opportunities in the long term of things. The first company we're going to take a quick look at is Crowdstrike. The second company we're going to take a quick look at is Twilio. One is in the cybersecurity market. The other one's more of the software development market. And on today's episode, I want to take a quick look at what's some of the negativity coming in with these stocks. I also want to see some of the bullishness. And if this is your first time here, guys, make sure to hit the thumbs up, make sure to hit the subscribe button, and let's get started. So like I mentioned, the first stock we are going to take a quick look at, it's Crowdstrike. And Crowdstrike, this is mainly a cybersecurity play. I do believe the cybersecurity, we're still in early stages, and this is a market that can continue to grow. So full disclosure, both these companies are in my portfolio right now. I have no intentions of adding on them this week. But that might change over time. But Crowdstrike right now is sitting under the NASDAQ as ticker CRWD. For the day, it did end about 3% down for the day. And we can see from its 52-week high, the stock has definitely seen better days. It's kind of peaked up in August 30th, and it's right now down about 11.29% with a market cap of $57.97 billion. So first, let's try to understand the negativity. First, just the overall volatility in stock prices right now, I believe is one of the biggest reasons stock price is down right now. But earlier today, we did see some downgrade from Crowdstrike, holding to a neutral from a buy from some big banks out there right now. They keep their price at $305 for their price target. Remember, Crowdstrike is still sitting at $254. So even though they kind of downgraded their listing, the price target is still the same. Another thing I want to say, and normally I don't really look at insider selling, but I do believe it kind of brings some form of negativity into, or some bearish sentiments into stock prices. At the end of the day, I understand that insiders and everybody else who owns good portions of business sells for a reason, either for some type of money they want, they just want the cash. So it to me is not necessarily a bearish case, but I did want to bring it up. On September 10th of 2021, there were reports that Carrie Davis, director, did sell out about 4,000 shares, which were about $1 million worth. This person still has about $6 million worth based on empty news wires right now. So again, not for me, it's not a bearish sentiment, but I do believe certain investors can see it that way. Now let's take a quick look at some of the good things about Crowdstrike. First, I do want to say they do have a very, very strong balance sheet. Right now, we can see they have about $1.8 billion in cash and cash equivalents, and they have about roughly $770 million in non-current debt. So they have a strong balance sheet, in my opinion. This is a company that is able to continue, maybe do future acquisitions, maybe be able to continue to do innovative and kind of expanding their products and stuff without having to worry too much about the cash at hand. Another thing I really liked about Crowdstrike right now is their free cash flow margins at the moment. We can see Crowdstrike right now in trailing 12 months, free cash flows are as high as 32%. They do keep a good portion of their money, which is super, super exciting. If we take a look at their most recent earnings, which they reported August 31st of 2021, this company saw an annual recurring revenue of about 70% compared to the same time last year. So strong growth. This grew to $1.34 billion. Some other stuff is recent highlights. Right now, the company added about 1,660 net new subscription customers in the quarter for a total of 13,080 subscription customers as of July 31st, representing an 81% year-over-year growth. And then their customers who have 4 or more modules are increased dramatically. About 66% of their customers have adopted 4 or more modules at least. I think that is super impressive, and these numbers continue to rise. So overall, strongness in Crowdstrike. The second company we're going to take a quick look at is Twilio. But before we go there, guys, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through The Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns, If growing your money is something you like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. Alright, so the second company is Twilio. Right now this is traded under the New York Stock Exchange as ticker TWLO. Right now it's down about 2% for the day, 1.86, sitting at $336 with a market cap of about $59.52 billion. From its 52-week high closing, the stock is down about 24%. So it's definitely seen quite a reaction right now. In forms of negativity, again, we have seen some insider selling. Again, I don't believe this is much of negative news, but the CEO did sell about $10 million worth of shares. Some of these shares could be forms of bonuses, right? So I want to say these insider sellership, it's not necessarily a bearish thesis. I know a few people like to look at it. I don't. Some other things about Twilio, right? It's just, again, pretty much just insider sellership. I do want to take a quick look at their most recent earnings. But for those that are not familiar with Twilio, they are pretty much a platform that, hey, if you are a big company, if you are an app developer, if you want to kind of add some form of communication into your application and don't want to deal with the stress of kind of starting from scratch, Twilio already has kind of SDKs and platforms to allow you to kind of start in already with messaging, video, and other types of communications that you can just add on to your application. If we take a look at their most recent earnings, revenue for the second quarter grew 67% year over year. So strong growth right there. They have more than 240,000 active customers. And for the upcoming quarter 3, they guided for somewhere between 50 to 52% year over year growth. If we take a look, they definitely do have a strong balance sheet. They have non-current debt of about $1.2 billion, but then they have about $4.1 billion in current investments and about $1.8 billion in cash and cash equivalents. So they have plenty of assets, very similar to Crowdstrike, to pay off their total liabilities, even their non-current debt, right? Their non-current debt. So balance sheet is super strong for Twilio as well, which is super impressive in my opinion. I do want to say, unlike Crowdstrike, right now this company is not positive in free cash flow from free cash flow margins, but we can see if we take a look at trailing 12 months for the past few quarters, this has been improving over time. I do believe if this trend continues within the next quarter or two, we will see trailing 12 months of positive cash flow from of positive free cash flow margins. If we take a look at individual quarterly, that's already the case, right? There have been already some quarters where this company has been positive, but I like to look at trailing 12 months. Now, what I do want to do is look at is technicals. So we can see Crowdstrike right now, I do want to say it's not heavily overextended from its short-term moving average. So I do believe a good portion of the risk has been eliminated. Obviously, stock price are volatile, so stocks can continue to go down. These are levels for me where Crowdstrike is more of like a dollar cost averaging opposed to buying a big position at once. Twilio, I want to say, whoops, we lost Twilio. Twilio, I want to say, is probably in similar cases. It's not overextended. This one's probably a little bit less extended than Crowdstrike. I do want to say this, if I was to open up a position in Twilio right now, it would be a little bit bigger than Crowdstrike. But like I mentioned, softwares right now, the overall market can continue to be heavily volatile. So stock prices can continue to go down. The final thing I wanted to take a quick look at was forward EV to EBITDA ratio. I actually want to take a quick look at them in a single panel. And one thing I'm seeing, right, Crowdstrike normally tends to be higher than Twilio, and there are times when it gets a bit overextended. Both of them have seen quite a nice pullback, and I do want to say, compared to where they have been historically, right now it seems like they're properly valued. For me, these are the times for dollar cost averaging, not the time for heavy position building. So these are my thoughts, guys. I hope you enjoyed today's episode. Take care, have a good night, and see you next time.